Arturs Kokins. I'm a managing principal at Capco. And so Capco is a management consultancy, and we work a lot in the financial services. So we do a lot of work with insurance companies. And I myself have spent the last 10 years or so working with insurers, reinsurers, brokers, on many different things, but increasingly so on, advising them on how to think about insuring intangible assets. And so obviously crypto is a big part of that. And so that's really what I'm going to talk about today. What are the opportunities in this space? What are some of the challenges that I see? And I'll maybe start with just a quick hypothesis that, I think that crypto assets are here to stay. They will grow, and, they will become the new normal. I'm sure many of you in the room will agree with this statement, but, if you don't, then I'm afraid you might find the rest of my presentation a bit irrelevant. If there's anything better for you to do. But yeah, so that is the hypothesis. I think there are many signs of that, right? You have the technology spreading, you see more and more use cases, you see wallets growing, and I think they'll keep growing. And as that happens, that will obviously open doors for a range of digital assets. You have things like custody of digital products becoming, a standard offering in the capital market. And obviously tokenization allows more efficient financial products. But so if you believe that this hypothesis is true, I think you will quickly realize that, the future is really bright for the industry. There will be many, many different use cases and, tremendous opportunities for crypto insurance. Now, obviously, people are dreaming about all sorts of stuff in this space. But, one of the interesting recent examples that I found curious was just an announcement by HSBC saying that they are buying a plot of virtual real estate in an online gaming space. They also said that they're launching a metaverse portfolio for their clients. And if you think about this and how all of this could develop and evolve, you can immediately start thinking about things like, well, what would those, virtual properties mean for things like virtual mortgages, virtual property insurance, virtual credit default swaps, and many other things. And so immediately people will be thinking about all of this good stuff. And obviously it's a nice dream, right? But at the same time, I think that it's fair to admit that crypto asset space is still not mainstream. And there are, many signs of that. But I think sometimes a really good demonstration of something like that is just looking at, mainstream media and what's being said. And so I'm sure many of you are familiar with the recent Ronin network hack. So long story short, some $650 million value was stolen. The interesting thing about that was that there was barely any interest from the mainstream media, at least initially. There's obviously lots of chatter in various crypto communities, but that's about it. And if you think about it, if you think about, for instance, an individual or a group of individuals entering, I don't know, a major bank in Amsterdam or London or New York or anywhere else, and, stealing $650 million of traditional assets, I am sure we would see an entirely different reaction from the mainstream media. So I think perception matters, and I think that people's perception about the value of and importance of crypto assets is still very, very different from the perception about traditional assets. And so so how do we move that to mainstream? And obviously, many of you in the room are working on various things, right? But I think one of the interesting aspects here, in my mind, is that we need to make the whole thing more boring. It sounds weird, but I think if you ask a lot of very traditional financial services players, I think they'll tell you that the whole space just feels a bit too exciting, too volatile, too uncertain, too weird in some cases. And what they want is, something more stable, more dependable, more predictable. And it certainly applies to traditional insurance. And so, the various developments more recently around, central banks experimenting around, the kind of centralized stable coins and some of the regulatory developments, I think it's all good news, really, to make this space a bit more boring. And I seriously think that the more boring it becomes, almost the better for the future of the insurance industry. Now, it is important for the insurance industry because if you think about how the industry is structured and how it has operated in the past, you'll see that it's all concentrated around traditional assets. So that is what the insurance businesses are used to insure, right? So property, machinery, all sorts of equipment, things like that. And the interesting thing is that if you think about the value around us, I don't know, take S&P 500 market value, for instance, you would find that an increasing proportion of this value is intangible. So things like reputation or intellectual property are suddenly really important. And insurance companies are really, really struggling to insure intangible assets. Again, many reasons for that. I already mentioned the point about the space becoming more boring as a good thing. But yeah, I think a lot of players are struggling to quantify these things. They're struggling to predict what's going to happen. They have limited data points from the past. So it will take a while. I remember speaking with someone from Google a while ago, and we talked about insurance and some of the developments, and the point made there was that and insurers talked about understanding cyber risk, and insurers talked about cyber as an emerging new risk, and the point that companies like Google would be making, well, cyber risk it's not emerging. Obviously, it's been around for decades now, basically. Whilst insurers are thinking about that as something new. And so crypto is no different, right? Crypto is part of this puzzle. And the point is that you suddenly have this new ecosystem with a large number of new risks that are hitting all these different ecosystem players. And obviously, insurers are struggling with that. I think according to some estimates, only around 1% of that value is currently insured. Obviously, the total value is in many, many billions of dollars. So that is the value that is currently unprotected, and that is, in theory, a fantastic opportunity for insurance players. The good news is that the market is picking up, and you can see a lot of activity around different things. So starting from direct to consumer insurance offerings. So that's really about individuals protecting their wallets against hacks and things like that. Then there is more traditional commercial insurance offerings where and that would mostly be around transaction facilitators who would want to have some coverage. That is the space where some of the more traditional insurance players have started getting involved recently. You have some experimentation around embedded insurance. Coinbase is a good example where they're providing some protection in case of a platform-wide cybersecurity breach. And then there are some relatively niche, specialized insurance products. Crypto mining is one example where obviously you have very, very specific, quite unique risks, and clearly you need coverage. But I think the interesting thing again here is that most of these efforts are coming from insurtech, so new startups. The incumbents, the big incumbents who have a lot of capital, right, are still playing this wait and see game a little bit. They're trying to understand where it's going. They're sometimes backing some of these startups. But I think for this to really kick off, you obviously need to see way more activity from big established insurers and reinsurers. On that point, on this page here, you can see a graph that shows the combined ratios of Lloyds syndicates over the past 10 years. And for those of you not really close to this, I mean, the insurance market is really cyclical. So you have some years where the market rates are pretty high. Not a lot of capital is available. And so the insurance players who are operating there are able to generate pretty good profit margins. And then normally what happens is that as market continues being attractive, you start seeing more and more influx of new capital. Therefore, prices start reducing, and then therefore, profit margins get tighter. And then eventually you get to a situation where some of the losses start accumulating, profit margins are tight, and therefore, some players get into trouble, start exiting the market, and kind of the market flips back again to higher rates and higher profit margins. Now, so combined ratio, 100 plus is basically bad because you're losing money, and below 100 means that you're making money. And so you can see here how right now, 2021 is looking really, really good. People are making money. So Lloyd's market is obviously the center of specialty insurance in the world. So those are exactly the players that you would expect, should be the first movers in things like crypto insurance. I would make an argument that this is the best time possible for people to enter the space and, go and experiment, go and learn. Yes, maybe make some losses, but actually without really troubling your bottom line too much if you, put the right limits in place. So this is a great time. The interesting thing and the biggest challenge is that I think a lot of executives also think that this is exactly the right time to, generate a lot of money in traditional products. And so, why should you go to this super exciting, super volatile space if there is the good old traditional, property insurance market and casualty insurance market, which you have explored for decades, you know how it works, and you can generate very, very good returns because, rates are high. So I think that mindset will need to change. I've seen that changing in some pockets, but obviously it needs to keep evolving in the next few years, and hopefully we'll see more products in the space very, very soon. Meanwhile, just another thing to note, I will not dwell on this too much. Obviously, you heard earlier today some really good presentations from Nexus and from Etherisk. And there are a few more presentations I know coming up after mine. But, while some insurers are thinking about all these coverage gaps and coming up with new products, you have these really, really interesting developments that have started emerging around challenging the entire insurance model. So it's kind of looking at the traditional insurance business model and thinking about ways how you can decentralize some of that and make it more efficient, make it more fair, and so on. And so it's really great to see. Again, my worry is that, most of the developments are coming from new players. I mean, it's great, but I would like to see more developments from big incumbents in this arena. The good thing is that as more and more projects come along, I think the well-established insurance companies are learning from that, and hopefully we'll see more and more support again from their executive teams in terms of embracing some of these emerging models. So to wrap this up, really, I think there are three things really that insurance companies need to be thinking about. So one is, how do I start experimenting with coverage for crypto assets? So as I said, it's billions worth of crypto value sitting unprotected at the moment, and it's a massive opportunity for insurance. Secondly, how can I embrace and operationalize a decentralized insurance model? And as I said, it's great that some of the startups are experimenting with this. I want to see more activity from incumbents. I think it's, again, a great opportunity. And then finally, how can I make sure I'm attuned to market developments and regulatory changes? Obviously, this community here in the room is kind of self-selected, right? You're all interested in the space and you're all really knowledgeable. Many of the execs, I think, in the insurance space are still getting up to speed, right? And still trying to understand what cryptocurrencies are and what crypto assets are and how it all works. So there's a long way to go. I think that education needs to continue. But, with every event like this and with more and more activities, it's getting better and better. So we at Capco are advising insurance companies on all of these three questions, and we are working through that, kind of trying to help them figure out where to go, figure out how to implement some of this new technology. So, reach out to me if you want to learn more, and happy to take any questions if there are any in the audience right now. But yeah, that's it from me today. Thanks a lot.